Now, in Delta's case, we need to know the profit and loss which has been recorded as part of P&L. So we need to calculate the goodwill, value of NCI, and post-acquisition profit, the position of Alpha, what was the cost of investment in it, and at what value they disposed it of. So 1st October 2012, Alpha issued 80 million of its shares in exchange for an 80% shareholding. Delta had issued share capital of 100 million shares. So out of that 80 million, 80% is given to us directly. The fair value of Alpha is 1.40. The fair value of net assets of Delta on 1st October 2012 were the same as their carrying amounts. Means there is no fair value adjustment required here. On 1st October 2012, the directors of Alpha initially measured the NCI at its fair value. So once it is measured at fair value, it will continue to be measured at fair value. The fair value of NCI is given at 1.10. How many shares? Out of 80 million, 20 million shares is NCI. Value is 1.10. The individual financial statements of Delta showed net assets. 1st October 2012, it was 110 million on the date of disposal. So it is disposed of. On 30th September, it is to 170 million. This is the profit from change in net assets from 1st October 12 to 30th September 17. In the current year, ended 30th September, the individual financial statements of Delta showed a profit of 24 million. So this year, there is a profit of 24 million. On 31st March 18, Delta paid a dividend of 9 million. So in this investment, there is a dividend repaid of 9 million. The profit earned this year is 24 million, out of which 80% belongs to parent and 21% belongs to NCI. They disposed of the shareholding on 30th June. So how much of the profit will be included in this year's profit out of 24 million? How many months profit? From 1st October 17 to 30th June 18, how many months? 9 months of profit out of 24 million is included, is earned by Alpha. On this date, it is disposed of for a cash proceed of 80 million. The individual financial statements of Alpha recognize the correct. So it has already been recognized. So is the reason we did not include it as part of our consolidated financial statements. We simply need to know no impairment of goodwill has been necessary till 30th June. So what we need to know, we should know the goodwill. We need to know the value of NCI, the cash proceeds, the net position. Profit on disposal of Delta. If I talk about the group structure, which you can copy from the group structure we discussed. So it is a subsidiary The date of acquisition is 1st October 2012, 30th June 2018. Working note number 1. Working note number 2 is net assets of subsidiary. Date of acquisition and date of balance sheet. Share capital. It says that net assets means share capital plus retained earnings on 1st October 12 was 110 million. Share capital plus retained earnings. No change in fair value. Net assets position date of acquisition is 110 million. What is the position on date of balance sheet? 110 million plus on 30th September it is 170 million. But in 170 million there is a profit to be added of 9 months plus profit for this year. How much is it? 170,000 plus 24,000 into 9 by 12. Total profit. So net assets of subsidiary on the date of balance sheet will be equivalent to 18,000. So 170 plus 18,000 is equal to 188,000 is the balance on the date of balance sheet with the profit earned during the year. Less dividends paid. How much is dividend paid? 9,000. So total date of acquisition is 110,000. Date of balance sheet it equals to how much is the change in net assets? 69,000, out of which how much belongs to parent and how much belongs to NCI? %, of 69,000 belongs to parent and 20% of it belongs to NCI. $13,800 belongs to NCI and 80% of it belongs to the parent. If we talk about goodwill, fair value consideration, how much is paid? They paid 1.40, issued 80 million of its own shares for 80% shareholding. 80 million of its own shares means 80,000 into 1.40. The total consideration paid is 80,000 into 1.40, 112,000. Fair value of NCI, fair value of NCI, out of 100,000 shares, 20,000 shares belongs to NCI and the value of each is 1.10. 20,000 into 1.10, which turns out to be 20,000 into 1.10. Value of NCI is 22,000. Fair value of net assets subsidiary on date of acquisition, we get it from working note number 2, equals to 110,000. So goodwill equals to 112 plus 22 minus 110,000. 24,000 is the value of goodwill. So sales proceeds were equal to 180 million. Net assets of subsidiary. Goodwill. Value of NCI. For value of NCI, we need working note number 4. Value of NCI. Fair value of NCI on date of acquisition, which is equivalent to 22,000. Share of profit of NCI. We'll get it from working note number 2. 13,800. Total value of NCI. 22,000 plus 13,800. 35,800 is the value of NCI. Goodwill. 24,000. So this is actually not date of balance sheet. This is date of disposal. So I did the correct figures, but plus and minus BODMAS field. So sold proceeds from this investment is 180. The total value of the firm is equivalent to 179 plus goodwill. This is the total value of the firm which we are disposing of. So according to us, the value of the firm for the fair value of the net assets of subsidiary is 179 plus 24,000. If we exclude NCI from it, the profit on disposal is 12,800, which has been already included as part of P&L account. So we do not need to do anything. We simply needed to calculate the profit on disposal, and we gain 7 marks out of it. So this is all for question 1. If anyone having any doubt in this? Hello. Hope you understood this. So there's a subsidiary known as Delta whose net position was 110,000. Till the date of disposal, the net position reached 188, but out of it, 9,000 dividend has been paid. So net assets of subsidiary on the date of disposal is 179,000. This is being disposed of. This is the total value of subsidiary. Since we are controlling it, this is the total value of subsidiary which is being disposed of. This is excluded. So we include goodwill, means it gives us the total investment made by us. In the net assets of subsidiary, the total investment made by us is 24,000, and we also include the fair value of NCI, the value of NCI on fair value basis, and the profit of NCI component into it. We get to know the total investment in the subsidiary 100% and NCI, total value of the firm as 100%, which is being disposed of, total money being paid for disposal. The difference is the profit on disposal made by us, which we have recorded as part of P&L. Any doubt? Hope this is clear with everyone. So this is all for disposal of Delta.